Hello and welcome back to the second lesson. Now we will take a look at Forex pairs. We will get more into the details. I will show you how to read Forex quotes and Forex prices. Then we will explore the difference between the bid and the ask price. We will look at spread and trading costs and also explore the difference between major, minor and exotic Forex pairs. So as we saw in the last video, currencies are always quoted and traded in pairs. And below you can see Euro-USD, which is the most commonly traded Forex pair. And the first currency in this equation we call the base currency, and the second one is the quote currency. And as we also said in the last video, if we have the price Euro-USD 114, it means you need 114 US dollar to buy 1 euro. As we also saw in the last video when we took a brief look at our broker, we saw that every Forex pair has two prices, and the first one is called the ask price, and the ask price on your broker shows you the price the seller is willing to sell for. And this means that if you want to enter a buy trade, you want to buy a certain currency, you have to obtain that currency from your broker and the broker will sell it to you. So the ask price is the one you have to pay when you enter a buy trade. On the opposite side, the bid price shows how much the broker is willing to buy for a certain currency pair. And so if you want to enter a sell trade, then you have to sell the currency and the broker is on the other side of this equation. And the bid price shows how much the price is going to be if you want to enter a sell trade. Then the difference between the two prices, the difference between the bid and the ask price, is called the spread, and it is the cost for entering a trade. As we will see later that the bid and the ask price is always a little bit different, and the difference between those two prices is the cost. Then there's a second part when it comes to the costs of a trade, and this is what we call swap. And the swap is charged when you hold a trade overnight. And we have swap in Forex trading because of the interest rate differences. And this means that because currencies are issued by different countries, every country has its own interest rate. And when the interest rates are different for the two currencies and the two countries that you trade, then you might have to pay a swap price, which is usually quite low, and it is directly deducted from your trading profits. In some cases, the swap will be credited to your trading account as well, and it is not a cost, but it's also part of a profit. Then, as we said, there are three different categories of Forex pairs. The first one is called major Forex pairs, the second one is called minor pairs, and the third one is exotic Forex pairs. You can see we have now made a little table. The major pairs are the main currencies, the biggest economies in the world, and also the most traded pairs. So you can see we have the Euro-USD, which is the most commonly traded Forex pair overall. Then you have pairs like the US dollar, Japanese yen, the British pound US dollar, the US dollar, Canadian dollar, US dollar, Swiss franc, the Australian dollar, US dollar, and also New Zealand dollar, US dollar. Then we have a big group of minor Forex pairs. Those are less traded pairs, and you can see them right here. And finally, we have the exotic pairs, which include currencies which are not as much traded at all. And often when you read through different Forex platforms or Forex forums, then you will see that those exotic pairs are not as much referred to. And the difference between majors, minors and exotic pairs are listed here. So the spread on the majors is usually the lowest, which means that trading the major Forex pairs is usually the cheapest option. At the same time, the volume is higher on major pairs, which just means that more people trade the major Forex pairs. And finally, the volatility, which means how much price moves, is larger on the minors and exotics. There are a few exceptions to that, but generally speaking, this is true. Minors and exotics move faster, they move more. And this can mean also more risk, as we will see later. So beginning traders usually stick to the major pairs. They take some minors, but mostly beginning traders stick to the major pairs to get an overall feeling for the Forex market. And now we take a look at Forex trading sessions. As we said in the beginning, the Forex market is open 24 hours. When first on Monday morning Sydney and Tokyo open, this is called the Asian session, and then we move on to the London session, and finally the last session is the New York session. So the Forex market starts Monday morning when Sydney opens, and it closes Friday night when New York opens, and between that the Forex market is always open 5 days a week, 24 hours a day. And knowing which session you are currently in is very important, because certain currency pairs move more in their own session, which means that when Sydney is open, usually you will see that the Australian dollar moves more. When Tokyo is open, the Japanese tends to move more. During the London session, you have the British pound, the Swiss franc, and the euro. And of course, when New York is open, then you'll usually see more movements on US dollar and also on the Canadian dollar. You can see that sometimes the Forex sessions also overlap, and in those sessions you can usually get the most currency movements. And the most active period is when you see the overlap between the end of the London session and the beginning of the New York session. This is the most active Forex session overall, and there are usually the most currency movements. We will later see why it is important to understand when you trade and in which session you are, and then you can also choose the currency pairs accordingly to make the best trading decisions. So we are back now on our broker platform, and when we look here at the left hand side, you can see the different currencies. When we just scroll down, you can see how many there really are, and we start here at the top. There are usually the major Forex pairs quoted, and you can also see we have the bid and the ask price here. You can see there is a difference. The ask price is always higher than the bid price, and if you want to enter a trade, then you have to buy the ask price if you want to buy trade. But we can see that here. So when we right click on the broker platform, we go to trading again, to new order. Then you can see here you have the two buttons for sell and buy, and the buy price is always higher than the sell price. So here we have the ask price, this is the sell price, and you can also see them here on the left hand side. On top you have the buy price, which is the ask price. At the bottom you have the sell price, which is the bid price, and you can see that there's a difference between the two prices. While we are at it, you can just simply change the currency you see here. You can see right now we have the Australian dollar, Canadian dollar, but if we want to take a look at any other currency, let's say the Euro US dollar, we just simply drag it here, and then you can see it changes, and now you have the Euro US dollar here. You have the prices here on the right hand side. We can go back to trading and new order again, and then you have the bid and the ask price here again. And that's it for this video. By now you should have a good understanding about Forex in general, the very basics of Forex trading, know the differences between bid and ask price, and also how currencies are quoted. In the next video I will show you how to install this broker platform step by step, and then we will get into how to enter your first trade. And afterwards I will show you how to read price charts and how to make trading decisions step by step. Until then, see you in the next video.